What's up guys, welcome back to a new video. So this video I'm going to be explaining to you guys what I do to trade, how I trade, the strategy that I use, and how you guys can also use it to become a profitable trader. So to start out here, I'm going to go on S&P 500. So quickly to explain to you guys, I do use S&P 500 when I trade. I used to trade Forex, so I actually used to do Euro USD, but it didn't really work out for me. And I saw somebody else, his name is TJR Trades, and he started to trade on S&P 500, and now I also trade on S&P 500. It's quite easy, the strategy and what to do. If you don't know the basics yet to trading, I highly suggest you go and look it up to really understand what the basics are and how the basics works. Stuff like liquidity and fair value gaps, but I'll try and explain it my best as far as I can explain it, and I'll try and give my best opinion on what you can do with the information that I'm going to be giving you. So to start out, I usually start on the 4 hours. I don't really go above 4 hours, as my trades only last about 30 minutes, maybe 40 minutes, sometimes even 10 minutes. So my trades are really short, so I start on the 4 hours. The only thing that you basically have to do on the 4 hours is to just mark out your previous highs and your previous lows. So for example, here on the screen that we see here, a low would be right here. This would be a low. I already marked everything out. I'm just hiding it now. That's why I'm not marking it out again. But this will be a low. This will be a low. That's a low. And then this is a low. So basically just all of your lower lows you're going to mark out. And then all of the highs that I have is liquidity here, there, and there. And that's basically all that I mark out. Then I move to the 1 hour. On the 1 hour, I do the exact same thing. So 1 hour, I just go sometimes it'll be the exact same, the liquidity that you mark out on the 4 hour, the hour and the 1 hour. But for example, here I see a few extra ones here that wasn't on the 4 hours. And I think this wasn't the 4 hours. But like sometimes it's really close to each other. Like for example, this is liquidity on the 1 hour. Here where my mouse is now. But so also now this is all. I'm recording this on the weekend, so market is closed, and my trade was taken around about. Let me just get to it. Round about here, I took my trade. So these last few candles weren't there when I took my trade now on Friday. Now it's Saturday today. Once you've marked it out, you went on the 4 hour, you marked out all of your liquidity on the 4 hour, you went to the 1 hour, marked all of your liquidity on the 1 hour. You need to understand news. You need to understand how the news works. So what I use is Forex Factory. Let me just type it in. So Forex Factory, I'm not going to set it up. I'm on my laptop now, and I don't trade on my laptop, so I don't have it on here. But just to, where is it now? This one. So I use Forex Factory. Here in the filter, I filter it for just USD, and also I just look at the red ones and the orange ones, which is the highest impact news. So if there is news, wait till news is done. Trust me. Wait till news is over, and then you can start trading. Otherwise, you're going to get into a trade and you're maybe going to get stopped out within a few seconds. So don't trade on news. Don't ever trade on news. You can trade before it, but I suggest just trading after it. And then the next thing that you need to do is you need to find out what time where you live does the market open. So I live in South Africa. My time zone is UTC +2, and South African time, the New York time section opens up. The New York banks open up at 3:30 or 15:30. It opens up. So then the market actually starts to move. Before it and later at night, I'd say past 6 o'clock, the market doesn't really move. So ideally you want to put in your trade in that time zone. And also S&P 500 is only USD. So all of the news and stuff that has to do with Europe and all of the other countries has nothing to do with S&P 500. So this makes it a bit more easier, and there's also only one time zone in a day where you can trade. And I suggest just focusing on one pair, just trading, for example, S&P 500 or trading NASDAQ, which is US 100. Like, choose one for yourself. I chose S&P 500 and this is what I trade. Also, the strategy that I do use, you can also use it on NASDAQ, but I won't suggest using this on Forex. You can try it if you want to, but that's not what it was designed to do. So now that you marked out all of your liquidities, I'm just going to take this away. So you see here, I didn't even go higher than this because price never got there. But I marked out these low liquidities here, this liquidity, and then those at the top. Then I go to the 15 minutes and this dotted line that you see here, that is just basically market open. For some reason, like the past few weeks, within the first hour of market opening, the market didn't really move much. So there wasn't really much that happened within market open. Which is fun. I just sat at my computer and just waited. Also, there was news at market open, which, as you can see, didn't really do much. So news doesn't always do something. It's just sometimes news does highly affect the markets. And so from here, all that you have to do is you just have to sit and wait for it to go up to one of the liquidities or down to one of the liquidities. If it goes up and it touches the buy side liquidity, then you're looking to sell or you're looking for continuation. But this video is just going to be trying to find the reverses and the reverse movements of the market. So you'll see right here, it tapped into that liquidity. So I just sat on my computer, did nothing, just looked at the market and waited for it to tap into it. As soon as you see it tapping in like this, exactly tapping into it, or if it sweeps liquidity and it goes above it, I immediately go to the 5 minutes. Now I'm basically stuck on the 5 minutes. So this is where it tapped it. On the 5 minutes, I stay on the 5 minutes until I see a down candle. Because it went up now, I'm looking for a down candle because I'm looking to sell. Again, this video is just trying to find a reversal of the market. Later on, I'll make a complete video of also trying to find the continuations of the market. So now I was just waiting and it was the next 5 minute gave me a down candle. Also, this was a fair value gap. As you see here, I drew it here and I just took it out. So the fair value gap was also there. So I stood here and I waited for the 5 minute down candle to completely close, which it did, and it was a red candle, a down candle. And then let me just go back to it here. Okay, here it is. So got a 5 minute down candle. I think it closed like somewhere here. From there on, I'm looking for a break of structure. So already you can see the first break of structure was taken right there. There was the first break of structure. Just going to delete that. So first break of structure on this green one right here. You can see this one pushing below it. And this is now, so the 5 minute candle that went down is this one. So I'm only looking here. I'm not going back even further. So here, first break of structure. That's good. 1 minute break of structure indicating that we are going to go down. Now I'm looking for a second confluence. Always trading on stuff like this where you are sweeping out 4 hour and 1 hour liquidities. You're always looking for a high time zone liquidity grab, and when you see it, you want more than one confluence. I wouldn't be just taking a trade because of this 1 minute candle that broke structure. So I was waiting for maybe a pullback, which it did give a pullback. It just went up and up and up and up. Yet came down again, but didn't break any structure yet. Went up again, came down, broke structure right there. And so I entered my trade. Let me just get this. I entered my trade. I got filled in about here. And my stop loss was exactly where this thing is right now. I'll explain it now. And if I draw down right here, you'll see that this is where I took my first profit, which hit, and then my second profits were down here. So this is just trying to explain how I take trades. Risk management, stop loss, and take profits will be a different video where I'm going to explain how do I set my stop loss, how do I set my take profit, how do I decide what it is, and all of those stuff, and when do I move my stop loss, stuff like that I will discuss in another video. But this video is just purely to get you guys to understand how to actually take the trade and when to enter the trade. So again here, if you see here, as soon as it broke structure first, there was another fair value gap. So what also could have happened, let me just delete all of this stuff. Let me just delete this line. So what also could have happened was price tapped into this one, but it didn't fill it completely. If price filled this 1 minute, sorry, not order block, this 1 minute fair value gap, if price completely filled it and then gave me a down candle with a big rejection, then I would have also been in the market. Then I would have also put in my sell. But because it didn't, I was just still waiting for price to give me a reason to actually get into the market, even after the first break of structure. So those are basically the two stuff that I do. Actually, there's three stuff that I look after. So also I'll draw the Gann box, or you can even use the Fib retracement. This is 50%. So I'll go from the high to the low swing, and I'll look for 50%. Price taps into 50%. So again, if this candle was a big rejection and it went downwards and it was a sell candle, then I would have been in, I would have put in my sell, and that would have been my second confirmation, which for me is enough. But because it didn't, because it's like basically just stood there and even tried to push up and tried to push down and just nothing happened, I didn't enter on it. And these are basically the three confirmations that I look for. So firstly, there must be a 5-minute down candle after you grab liquidity. Then secondly, you are looking for a break of structure under 1 minute. When you find a break of structure, I always draw my 50%, my Gann box or your Fibonacci, and I'm looking for it to tap into 50%. I look for fair value gaps, like one like this, or I look for a retrace and then again a break of structure to the downside without really pushing above my previous highs, where it took out liquidity to indicate to me that the market is completely changing direction. So that's exactly what happened here. It went up, that didn't give me an entry, broke structure again, and was in a bit of a loss for a few minutes, for like 4 minutes, and then it just went down and I was in profit until I did my final take profit. And to just show you guys, that was let's say 25 minutes for it to hit my full take profit. So this is just an example from this day, and you do learn as you go along. There are a lot of days that I can show you guys. Some days it doesn't work out, other days it does work out. As you go along, you'll teach yourself stuff, and one of the big things that I can already tell you guys is to not get emotional. Like when you're trading, try to keep your emotions out of it completely. You need to focus on doing the trading, and even if it goes bad, like just keep on focusing on the trading. Don't do something else before you've even entered a trade. Like sit at your computer, look at the markets, try and study it, try and find out exactly where you can enter, where you can't enter. And again, stuff like if you should be trading on a funded account, if you should be using your own money, if you should be trading on a demo account. I'll discuss those type of stuff again in a different video dedicated to that specifically. But this is basically the strategy that I use. Also, the strategy, as I said, can be turned around completely. And this could have been like complete inverse. It could have went down, swept liquidity, and then I would have bought. But the same principles count. This is the same exact thing that I do over and over and over. And I suggest to go and look back on some days and try and find out where you would have taken a trade, try and see how the market works. And it isn't going to play out every single day, but if you get enough in the market, like nothing is going to be 100% win rate all the time. Nothing, no type of strategy that you are able to use will give you a perfect 100% win rate for everything that you do. But this has been working for me, and I learned this from TJR Trades. If you want to look him up on YouTube or Instagram, he's really good, and basically all of the stuff that I know I learned from him. Also from ICT, so a lot of this stuff also has to do with ICT and basically the same kind of strategy, he just does a little bit more. So this is really simple and short actually, and that's exactly the point. Like, it's so easy. I just trade S&P 500. I just use this strategy, and it's quite easy to understand. It's quite easy to actually do. So there's nothing that you really have to, like, fancy stuff that you have to draw or try and figure out, or support and resistance. Like, it's nothing like that. It's quite easy to do it. And so this video is dedicated for you to just see where you must get into the trade, because I feel like that is definitely the hardest part. If you can find trades and if you can get into trades, then you can worry about, okay, where's my stop loss, where's my take profit, stuff like that. You can worry about later on. But the first thing needs to be, you need to be able to get into trades. Also, just a last thing, something that also happens sometimes is the market will just crash down completely. So the market will just keep on going and going and going and going without giving you an entry, and then it's fine. Like, just don't trade for the day. So this is going to be it for the video. There's going to be a few videos on this. This is just the first one, and this is basically going to be a series of me explaining all of the stuff that I know, how to trade, when to trade. Again, like the stuff that I explained, I'll be explaining everything, and how I do everything, and how I decide to do everything. And also, there are some days that I don't trade at all, and then there's other days where I do trade. So it depends on the week. So that's it for this video. I hope that this really helped you guys. Again, I suggest go onto TradingView, which is what I use. Go look at the markets and try and do it yourself. Like, go back, try and figure it out. And I'd say definitely the best thing to do is try and do it live. So now in the week, when the week is coming, try and do it every single day. Find out where in your time zone it actually starts, the market opens, and do it at home. Like, try and do it yourself, because the thing is, if you just go back and you look at market, you're able to see where the market went. So it doesn't really help that you sit there and you say, okay, I would have entered here, because you can see exactly where price went. So actually try and do it live. It's much different than just going back on different stuff, and just continue on doing it. I think that's the biggest thing. Like, you aren't going to get it right on the first day, not even the first week, maybe not even the first month. Maybe it takes you a year, maybe it takes you 2 years, but keep on doing it and keep on learning. Every time that you lose a trade, go back and try and see, why did you lose the trade, what went wrong. Maybe you were too greedy and you just saw one break of structure, like what happened here, and immediately you just entered, but then price went back up and it stopped you out. So I hope this helped you guys, and stay tuned for the videos to come. I'll be continuing to make videos on this to explain it even better and to explain more to it. I'll talk about fair value gaps specifically in a video. I'll talk about liquidity specifically in a video, but I think for now, just to get the basis down of how it works and what you need to do, I think this is perfect. So thanks for watching, and I hope to see you guys in the next video.